Turbulence ahead. Trump's sweeping tariffs prompt strong retaliation from China and Canada. In a stunning escalation of trade tensions, President Donald Trump's administration has implemented substantial tariffs on key trading partners, provoking immediate retaliation from both China and Canada. This development raises concerns over a potential full-blown trade war, which could destabilize the already fragile global economic landscape. President Trump's policy imposes a blanket 25% tariff on goods from Mexico and Canada, which came into effect last Tuesday. Additionally, tariffs on all Chinese imports increased to 20% from the previous rate of 10%. The White House justifies these measures as necessary to curb the influx of fentanyl and to clamp down on illegal activities at the borders. However, these tariffs also arrive at a time when inflation in the United States is stubbornly high, posing additional risks to the economic well-being of American consumers and businesses. According to 2022 data from the Commerce Department, the goods imported from these three countries amounted to a staggering $1.4 trillion last year. This constitutes over 40% of all U.S. imports, indicating how significant these tariffs could be in reshaping trade dynamics and consumer prices in America. Immediate responses from affected countries were swift and pointed. China announced a 15% tariff on key U.S. imports like chicken and wheat, and a 10% tariff on other products such as soybeans and pork. The Ministry of Commerce of China also took a targeted approach by placing export controls on American companies, which could hinder their operations in Chinese markets. Canada was not far behind in its response. Prime Minister Justin Trudeau announced retaliatory tariffs on $30 billion worth of U.S. goods, with plans to introduce additional tariffs, which signals a tense road ahead for U.S.-Canada trade relations. The impacts of these tariffs are wide-ranging. Notably, the stock prices of global car makers with manufacturing bases in Mexico, such as Volkswagen and Stellantis, saw a significant drop on the day the tariffs were enacted. This suggests market apprehensions about the ripple effects of these tariffs on global supply chains and manufacturing sectors. Economists and trade experts are ringing alarm bells, cautioning that these tariffs could exacerbate the inflationary pressures troubling the U.S. economy. The recent data revealing a contraction in consumer spending and a jump in consumer price index further complicates the economic outlook. Despite the international backlash and potential domestic blowback, the Trump administration remains steadfast, indicating that these tariffs could be just the beginning of a broader strategy. This approach, however, risks alienating allies and may undermine cooperative efforts needed to address other global challenges. As the situation unfolds, businesses and consumers are bracing for impacts on prices and availability of goods, ranging from electronics to daily groceries. The global community remains watchful, hoping for resolutions that could avert further economic disruptions from these unfolding trade wars. Thank you for choosing Satori News.